They call it a trap because most people don't even realize they're inside it until it's too late. And the truth is, millions are walking straight into it right now. Hi, my name is John, and I'm an ex-banker who turned a YouTuber. I've spent years inside the banking world seeing exactly how money and power move in today. I'm going to show you how the system is quietly trapping millions of people like you. If you like our videos and want to see more insider insights like this, press that subscribe button to show your support. I promise to bring you the truth most experts won't tell you. Here's the part nobody tells you. This trap isn't caused by bad budgeting or reckless spending. It's built into the system itself. And unless you understand how that system works, you'll keep thinking your money problems are personal failures, when they're structural. The setup banks figured out something decades ago. The easiest way to control your financial future is not by taking your money, but by taking your time. Once they control your time, they control your decisions. And the perfect tool for that? Monthly payments. Most people think they buy a house, a car, or a phone. No. What they're really buying is a stream of payments. The bank owns the asset, and you rent it with your future income. The industry calls this consumer credit expansion. Call it the lifelong treadmill. How the trap starts: you get your first job. You feel good? You want to start your life? So you finance a car, small payment, manageable. Then comes an apartment, credit cards, a new phone, a laptop. By the time you're in your mid-20s, your entire paycheck already has multiple claims on it. You're not working for freedom, you're working to service yesterday's decisions. And here's the scary part: the system rewards you for staying trapped. Better credit scores, more pre-approved offers, lower interest rates if you stay inside the system. Step outside it, suddenly everything costs more. It's like a casino loyalty program. The more you play, the more they trust you. Stop playing, and the doors quietly close. The second layer: income fragility. The real danger isn't debt. It's income fragility. Banks assume you'll keep earning the same amount forever. The economy doesn't care about your paycheck. One recession, one industry shift, one company restructure, and suddenly your manageable payments are a storm of overdue notices. Inside the bank, we tracked this with something called the debt service ratio. Once a customer crossed a threshold, one small shock could wipe them out. And right now, that number is climbing across almost every age group. The trap works because people mistake affordability for stability. Just because you can afford the payment today doesn't mean you can survive it tomorrow. Insider story. The hidden costs. Let me give you a real example from my experience. A middle-class family buys a house at a low interest rate. Monthly payment seems manageable. 2 years later, property taxes spike. Insurance premiums rise. Utilities introduce new fees. By year 3, that same house costs 20 to 30% more to maintain, even though the mortgage didn't change by $1. They weren't reckless. They weren't greedy. The system shifted under their feet. This is happening everywhere. Cars with mandatory subscriptions, degrees, financed by lifetime payments, investments driven by fear of missing out. The common thread: people are trained to think monthly payments, not total cost. That's the heart of the trap. How to escape the trap? There are 3 steps. They're surprisingly simple. Step 1. Build an uncancelable portion of your income. It could be a side skill, freelance work, or a small digital business. Inside the bank, we noticed people with side income streams were far safer. They couldn't be wiped out by one job or one economic shock. Step 2. Lower your financial burn rate. This isn't about being cheap. It's about removing fixed payments and creating flexibility. Flexibility is the opposite of fragility. Step 3. Shift from consumer debt to productive debt. The bank separates good borrowers from risky borrowers by one simple question: are you borrowing for lifestyle or leverage? People who borrow for lifestyle get trapped. People who borrow to generate assets escape. The most important insight: trap only works if you outsource your financial thinking. Letting the system define what's normal, house size, car, education, investments is losing by default. The system's goal isn't your freedom. It's your dependency. The people who win aren't the richest. They're the ones who see the game early and opt out of the parts designed to drain them. Millions are walking into this trap because it feels like the standard path. Nothing standard is designed for your freedom. It's designed for predictable customers, predictable payments, predictable control. Final takeaway: the moment you shift from asking, "Can I afford this monthly?" to, "How do I stay financially flexible?" the trap loses its power. Once you see it, you can't unsee it. The system isn't trying to ruin you, it's trying to own you. Your job? Stay UNOWN. Able, and remember, if you found this video eye-opening, hit that subscribe button and turn on notifications.